Hello everyone, Robbie Michnick over at BlackRock just came out swinging with some knowledge he wants everyone to hear. The guy's basically waving a flag saying, pay attention to this. And here's where it gets interesting. The entire crypto community is buzzing that XRP is at the center of all this. We're going to break that down for sure, but hold on, because tokenization is having its moment right now. Like everywhere you look, there's new intel dropping. Scott Bessent literally just declared that crypto is where America needs to be heading. Oh, and I've got more goodies lined up for you. ETFs are practically at our doorstep now, and there's some need-to-know stuff we've got to talk about. So let's dive straight into what Robbie Michnick is putting out there. Take a listen.
Well, I think my advice is more for the people coming in how they approach the space. I think it's very important to be discerning and to be very particular about which assets one is going to hold, right? There's a reason Bitcoin is still roughly 65% of the market cap of the space, because it has very clear product market fit and investor narrative and a big addressable market as this digital gold-like asset. There's a reason there's consolidation in a lot of the rest of the market cap in a few top assets, which is those are the handful that have really proven themselves and developed some degree of product market fit and economic utility. One has to be very wary going far down the table. There's hundreds of thousands of crypto assets out there today. The vast majority of those are or will be totally worthless. And so investors have to be careful around that. And they also, I think, should be wary around trading on a short-term basis. Certainly, short-term levered basis is a tough game a lot of times in the crypto space. And I think the people who've done the best in this space have taken a much more long-term fundamental view and understood that you have to be patient and you have to understand that there's volatility in the space and there will be cycles.
Cycles are inevitable. That's just the game we're playing. But wow, he really nailed some key points here. Picture the crypto landscape right now. We're drowning in hundreds of thousands of projects. What's filling up most of that space? Meme coins and dreamers pitching concepts they can't actually execute because the technical backbone and grassroots support just aren't there. Strip away the tech, strip away the community, strip away meaningful funding, and what's left? Pretty much nothing worth holding on to. The harsh reality is only a tiny percentage of these use cases will achieve worldwide relevance. Fast forward 5, 10, maybe 20 years, and most of today's projects will be ghost towns. That's his main takeaway. Don't get hypnotized by all the shiny objects flying past your screen. Plant your feet firmly with the proven giants: Bitcoin, Ethereum, Solana, XRP. Sure, I've got a short list of other contenders that deserve attention, but I'm keeping those cards close for now. Curious about the full lineup? Come hang out in my live streams where we can dig into the details and actually discuss what makes sense. But there's another critical piece he's pushing. You need to shift your mindset to the long game, not these wild short-term gambles where you're leveraging everything on a prayer. That let's throw caution to the wind and see how it plays out approach? Yeah, that's a recipe for disaster. Treat this like a lifelong portfolio play, exactly how serious stock market investors operate, and you'll position yourself to win over the next 5 to 10 years. Now, if you're feeling lost trying to piece together a solid strategy, getting professional guidance makes sense. But hold on, you need someone who actually lives and breathes crypto. Walking into an advisor's office who knows zero about digital assets and expecting quality answers, you're just spinning your wheels and wasting money. They'll fumble through responses that don't help you at all. The entire reason you hire a financial advisor is to get expertise that actually counts. Anyway, let's jump to a different topic now. So Mr. Man dropped this gem, and look, I had to pull it back up because this is important stuff, people. Here's what he said. For those individuals they still struggle to see why XRP is not being used currently at high volumes. This should open your eyes. USD will still be the regulated way banks use bridge currencies. When BIS prudential treatment of crypto assets reduces the risk weight from 1,250% to hold unbanked assets like Bitcoin, XRP, etc., then and only then banks will start to use XRP for liquidity. The way the FX functions presently is Great British Pounds, US dollar, bridge currency to peso, When crypto can be used, the flow will change to Great British Pound to XRP bridge currency to peso. You must understand us. You must understand how XRP enables RLUSD. RLUSD does not diminish XRP's use. Naveen Gupta, the use case for CBDC and currency and FX. Okay, let's roll the clip and see what he's talking about. Take a listen.
So from what I understand, Ripple is the underlying infrastructure layer through which money is transferred from, across borders, right? Where does the XRP bit come in? Is this a token?
So Ripple is a software. So nothing else. Ripple is a software which essentially enables this infrastructure to happen. XRP is trading freely in say, a exchange in the UK, where GBP to XRP is getting traded, say, for example, $50 million a day. Right? Similarly, there is an exchange in Philippines that is trading XRP to Philippine peso, $50 million equivalent a day. So what we are doing is we are bringing these two order books together, and when you're sending a remittance from GBP to Philippines peso, bringing these two order books together, we are transferring GBP using XRP as a bridge within 2 seconds itself and converting that to Philippines peso and doing the payout, right? And it's a software that essentially brings everybody together. XRP is itself trading independently of each other in these two order books. Thousands of people, they're trading it for their own purpose.
Any issues with the regulators?
No, this is fully compliant because what we do is we work with regulated institutions only on both the sides, and these are fully approved transactions. So the way it would work in traditional world will be GBP to US dollars to Philippines peso. In this case, it's moved from GBP to XRP to Philippines peso.
How is it different from, let's say, layer 2 of Bitcoin, like the Lightning Network or something, which is kind of like trying to do the same thing?
There are a number of people who are trying to do it. We have built a system at scale which essentially works. It's aggregated. We work with regulated financial institutions. So, yes.
So he's asking the big question, what's the deal with Bitcoin's Lightning Network? Why isn't it taking off? Look, we've had years to watch this experiment, and here's what actually happened. Financial institutions looked at it and said, no thanks, they're just not biting. Bitcoin's become something else entirely now. It's turned into digital gold, a place to park value. But when it comes to getting things done, that's where XRP, Ethereum, and Solana step in. These are the engines that'll actually run the financial system's machinery. Oh, and Chainlink, can't leave that out. That project plays a massive role in making all this work. I'd be doing you a disservice if I didn't mention it. Now check this. Just in, Visa's new report highlights how real-world asset tokenization could unlock $40 trillion in on-chain lending market, corporate bonds, private credit, real estate, all going digital. We're talking about bringing corporate bonds onto blockchain, digitizing private credit, tokenizing real estate, huge traditional asset classes. Here's where it gets interesting. Those exact markets Visa just highlighted, Ripple's been quietly building there for a while now. They've expanded their technology footprint, locked in partnerships, bought up companies operating in those spaces. So Visa publishes this massive report, and Ripple's already sitting there with skin in the game across every sector mentioned. You connect those dots yourself. Exactly. Arcax with the G Treasury play, Hidden Road handling private credit, Ripple Prime in the mix, plus all that real estate tokenization happening directly on the XRP ledger. We've watched multiple pilot programs spin up across these sectors too. It's been building quietly in the background. And here we go. This is that exact report I'm talking about. Real-world asset tokenization is creating opportunities for on-chain lending collateral. The market has grown from $5 billion December 2023 to $12.7 billion today, with McKinsey projecting total tokenized assets could reach $1 to $4 trillion by 2030. BlackRock's Buildo fund exemplifies institutional adoption, reaching all-time high market caps of $2.9 billion in tokenized treasury holdings in May 2025, with multiple on-chain lending protocols participating as yield distribution partners. Franklin Templeton's on-chain U.S. government money market fund, Benji, adds another $800 million in tokenized securities, government securities, while MakerDAO now derives nearly 30% of its $6.6 billion balance sheet from world assets. Traditional assets like corporate bonds, private credit, and real estate may soon serve as collateral for 24/7 global lending markets. This can be a bridge, the $40 trillion traditional credit market with the efficiency and transparency of programmable money, creating new liquidity sources for traditional assets. Major asset managers are already piloting scalable implementations with the potential to tokenize hundreds of trillions in addressable traditional assets over the coming decades. This right here, this is the moment we've been sitting on the edge of our seats for. Okay, here we go. And boom. Tokenization, the biggest technology revolution in history. So many people are sleeping on this. They have zero idea just how gigantic this wave is about to get. This is literally the engine that's going to pump massive value into XRP, Ethereum, Solana, all of it. We're pulling tokenized assets onto the blockchain and trading them like never before. Picture this. Tens of trillions, hundreds of trillions, and down the road, quadrillions with a Q. Yeah, I've covered this stuff plenty of times, but new people flood into crypto every single day. So let me paint the picture of exactly where things stand right this second. Let me walk you through the heavy hitter categories for tokenization, show you how much wealth lives in each space, and reveal what we've actually tokenized up until now. When you stack these numbers side by side, it's actually pretty funny how early we are. Real estate? Some estimates put it near 650 trillion. Others go a bit lower. Let's split the difference and say 530 trillion sitting there. Want to know the crazy part? We've tokenized 0.01%. That's a measly $20 billion in tokenized real estate, when half a quadrillion dollars is just sitting on the table. Stocks around the globe? We're staring at 145 trillion. Progress report? 0.001% tokenized. A handful of billion. Laughably small. Bonds? 0.001%. Everyone's throwing around predictions about hitting a trillion by 2030, but where are we actually at today? Square one. Global treasuries stack up to 28.6 trillion, and we've managed to tokenize under 0.01% of it, a paltry 7.4 billion. Money markets? 12.3 trillion total. Tokenization rate? Under 0.1%. We're basically running science experiments at this point. Sovereign wealth funds control 14 trillion. How much is tokenized? Under 0.001%. Global debt stretches to 338 trillion and tokenization is at absolute zero. Hasn't happened. Derivatives globally? Also sitting at basically zero. This whole sector is still on the launch pad. What's holding everything back? Regulation. That's the linchpin, especially in America. But Europe and several other regions already hammered out their rules. Banks over there could flip this thing into hyperdrive instantly. They're just sitting on their hands for now. Plot twist incoming, Scott Bessant, the guy running Treasury, just dropped a bomb saying they're demolishing regulatory walls blocking Bitcoin and crypto. Listen to this.
We will take a close look at regulatory impediments to blockchain, stablecoins, and new payment systems, and we will consider reforms to unleash the awesome power of the American capital markets. Americans deserve a financial services industry that works for all Americans, including and especially Main Street.
All right, so there's more stuff I've got to share with you guys. Tokenized stock and ETF DEX trading starts to go parabolic. Just early newborn numbers, and get this, I've also got footage of Brad Garlinghouse discussing ETFs just as we're on the verge of seeing them approved. Let's throw that on screen right now. Take a listen.
How do you see the future of investing in the asset class?
I mean, Andy, I'm very much a believer in crawl, walk, run. When I speak to friends of mine, I grew up in the middle of the country, and I talk to friends of mine, and they're interested in crypto. I'm always very much like, just to do a little bit here or there and, buy a small basket. And, I think that we're now deeper in that crawl, walk, run. 50% of financial institutions in the United States have zero exposure. These are, in terms of asset managers, zero exposure to crypto. That's great news.
Right.
That's tailwind. That's, do I really think that's going to be true a year from now? No chance.
Right.
What's the basket you tell them to get? Don't listen to Andy. Don't listen to Andy.
Low-cost index funds.
I think buying a basket and an index makes sense. I'm actually surprised. I'm probably going to get in trouble for this one, but there haven't been, to my knowledge, a basket ETF. Right? You got a Bitcoin ETF, an ETH ETF, an XRP ETF imminently.
There's one out there and many more on the way.
All right. I think that's brilliant. I think that's great. Again, you've probably both heard me say over the years, the idea of maximalism in crypto holds the industry back. I want to grow the whole pie.
So Ripple Bullwinkle just posted something awesome. Take a look at XRP ETF's status and key dates. Every critical deadline for XRP ETF rollouts is right here in front of you. Sure, parts of this have already crossed the finish line. Those are the futures products. But listen, the real action is coming. Spot markets are locked and loaded. Everything's in position to launch. And wait till you hear this. Chainlink CEO just said institutions are about to 10 times the entire crypto space in the blink of an eye. Pull this up. Let's listen to what he's saying.
So institutions have all the money because everybody put all their money into institutions. Like there's only so much retail capital out there to buy into DeFi. And I think the retail capital can get the blockchain industry to 5 or 10 trillion. And it can get DeFi to 1 or 2 trillion. But really we want to be in the hundreds of trillions in our industry. And we want DeFi to be in the tens of trillions. And I think the only way that happens is that all the world's institutions have a clear and simple way to adopt and a good reason to adopt DeFi. I think the way it happens is that
institutions are about to start pouring money into crypto and DeFi. Today I sit down with 2 crypto industry leaders, founder and CEO of Chainlink, Sergey Nazarov, and founder and CEO of Aave, Stani Kulachov, live in New York at SmartCon. These 2 leaders claim institutions are about to 10x this space overnight. Smash the like button, subscribe to Altcoin Daily. Institutions are about to start pouring into crypto, and the next 10 years will look like this.
So tell me what's going through your head right now. I've been dropping all this data on you for half a year straight. Where's your gut telling you we're headed? Moonbound or total wipeout? Here's my take, and I'm dead serious about this. We're staring down a rocket ship from 3, maybe 4 trillion, all the way up to 100 trillion in 10 years flat. Tokenization becomes the backbone, and coins like XRP, Solana, Ethereum, Chainlink, they're the ones building the highway we're all about to drive on. See you next time.